advanced DeFi strategies, and implicitly it's part two because we had a DeFi strategies part 1 2 weeks ago with the same lineup. But now we're back with Ref.2 finally live, which is super exciting. We're able to wrap up the year with a bang. So today we're doing DeFi strategies part 2, and we're going to get into some of the details about how you can concretely use Ref.2, because you heard about concentrated liquidity, you heard about limit orders, but how can I actually benefit from this? We have Ray today to go into some of the basic strategies and also a little bit of the advanced strategies that are available on Ref.2. And then we'll give some time back to our guests from near Malaysia, Pembrock, Metapool, RefDAO, in order for you guys to delve into some of the advanced or sophisticated DeFi strategies that we didn't get to talk about last time. So once again, I want to very, very strongly highlight that none of this is financial advice. We're illustrating some opportunities or possibilities within the DeFi space. And a lot of us, most of us here today talking are building the protocols directly or building on the protocols that we're talking about or have a stake in them. So this is not financial advice at all. This is neither a guarantee nor investment advice. So always do your own research and manage risk appropriately. Without further ado, let's do a round of introductions, starting with ABB. Tell us who are you, what do you do, and if you want to describe your project very briefly, please go ahead.
Thank you, Rin. My name is AVB. I do a lot of things on the NEAR ecosystem and community, including Ref.finance community board. I do ecosystem success at Metapool. Metapool is the first and largest liquid staking solution in NEAR, which enables you to stake your NEAR and receive ST NEAR, which you can then deploy on the rest of the DeFi world. I also have a YouTube channel, a podcast. I'm really looking forward to making a lot more content next year. Who knows, maybe an OnlyFans. The economy is getting pretty tough.
I'll subscribe.
Yes.
Antonio, same question.
Yes, hello. My name is Antonio, and I am the co-founder of NEAR Malaysia. So we have been doing some cool activities on this Q4 2022. We have been having a roundup with 2 or 3 universities in Malaysia and 2 other universities in Singapore. And we are trying to portray building on the blockchain and doing the different courses available as something fun and something with a bright future for the people in both Malaysia and Singapore and in general in Southeast Asia. And I am also helping other projects in the NEAR ecosystem, among them the incubator and launchpad NEAR Starter, which is probably announcing in the next 48 hours that will be launching on the 9th of January next year. So we are accelerating towards this launch of our own token. So we are able to launch other projects in the launchpad. We already have a couple of them, which will be very soon giving their own dates. So despite the bear, people are building, people are creating new features, and that's really exciting, right? And that's also one of the main reasons why we are here, because Ref just unveiled a very exciting feature for traders and for swappers. So yeah, it's only bear market if you look at the price, I think.
Amen. Ivan, same question.
Hello, everybody. My name is Ivan. I am CPO at Pembrock.finance. We are developing first leverage yield farming platform on NEAR. It calls Pembrock. So nice to see you, everybody. Nice to hear you guys. It's pretty cool to be among you, among other such experienced guys, and have a chance to tell some things to our listeners.
Okay, perfect. And last but not least, Ray, tell us a little bit about yourself, and maybe if you want to introduce Ref.
Yeah, hi. I'm Ray, a researcher at Ref.finance. So kind of primarily about my role, I primarily research into DEX design and kind of opportunities that can help Ref grow and kind of become bigger and stronger. And, just a quick overview of Ref. Ref is the leading DEX on NEAR. So, we have recently launched Ref.2. Prior to this, Ref.1 will just be essentially kind of what you all may know as AMM. And then in Ref.2, we launch discretized concentrated liquidity, which provides, of course, concentrated liquidity, but also the ability to place limit on the order and so on. Yeah.
Okay, brilliant. Thank you so much. Before we get started with the DeFi strategies, I kind of want to just ask a warm-up question about what you guys took away from 2022. What is our retrospective looking like? I'm very curious. AVB, if you want to start things off.
Well, for me, it was a very nice reminder that if something smells like shit and looks like shit, it's probably shit. I think that there was a suspension of disbelief with a lot of things happening in crypto. It's not uncommon in bull markets. But yeah, I think that we saw some very big personalities, some big brands. And to me, the takeaway is we're going back to the grassroots, back to building, back to putting the technology first, and reassuring that some of the things that people may have discounted or doubted. Sorry, I'm back. Can you hear me?
Yep.
Yeah, because maybe we were too, tech focused and maybe not enough marketing, not enough hype. I think that we were actually on the right track all along, and we're in a really good position for next year.
Yeah, that's a really good perspective. Antonio, what are your thoughts?
Yeah, well, at a guild level, Near Malaysia was pretty much born in February this year. So 2022 has been a great year for us. We have increased the membership, and we've had a lot of virtual events and also physical events in Malaysia, which is what I think has maintained the community despite the bear, right? Because some people are very price focused, but at the end of the day, when you have recurring meetings and so on, you stick to the community. As Alex said, a lot of fuck ups happened, and they were almost in its totality related with centralized parties. So one hopes that this will create a position of strength in the middle term for projects. I'm just thinking out loud, but some projects like Woo Network, Thorchain, Ref.finance, right? Projects that are bridging the gap in terms of efficiency that there is between DeFi and CeFi, right? So one day you can use decentralized applications and it doesn't come at the expense of speed or efficiency or capital efficiency, right? Liquid staking is like Stader and Metapool do. It's another great example, right? So I guess we can look at it in a very negative way when doing a balance of 2022, but there has also been a huge push in technology. And I do believe that DeFi is bridging that gap, and that's very positive.
Ivan?
Definitely this year has passed, really in a blink of an eye. So I can't even imagine that we just finish in this year and are about to start a new one. So personally, for me, this year showed that I can work much more harder and bring much more greater results than I thought, because even through some critical situations in Ukraine, we just were we just were doing our things. We are doing the best and got results, and it's amazing for me. So I believe the next year, personally for me, will be something like kind of vacation where I can take a little rest. But for crypto, I want to believe that the next year will bring more technical stuff and technical wars into the crypto, because now, as we can see, crypto is like something popular, trending stuff, and in my own opinion, crypto is a very powerful and amazing technical tool which can can bring a lot of interesting things in our life, some fantastical things. So I believe that technical side will win this competition with trending and popular things in crypto.
Absolutely. And you definitely deserve the rest, Ivan. Ray, what was your take on 2022?
Yeah, I think definitely there was a lot of hype going into 2022, most of which have died out due to kind of the current economic downturning. But I think, builders are still here to build, and the crypto community, especially in the decentralized aspect, are becoming stronger with the hope to replace some of the centralized entity that, many of the other speakers have mentioned previously. So yeah, I think, just keep building, and I think it will be good in the future.
All right. Well, speaking of building and bringing new things to the market and the ecosystem, I think that's a perfect segue into Ref.v2 and some of the DeFi strategies that one could deploy on this new version of Ref. So I'm going to primarily ask Ray some questions and ask him to give examples about some strategies, but I do want to make it open, and I want AVB and Antonio, you guys are coming in from like a DGen or trader perspective, and also Ivan, same goes for you. If you want to chime in, ask some questions, or make a comment, please feel free to. Don't feel like it's Ray's time and you can't chime in. You always can. But having said that, Ray, you mentioned that V1 versus V2. If we talk about what's new, V1 is like a regular AMM. You can swap tokens. There are liquidity pools. We get it. V2, like the main two components are the desecretized concentrated liquidity AMM. And shout out to Izumi. I see Jimmy in the audience, but powered by Izumi Finance and Arctic. You have the DLAMM and then the limit order functionality, which gives new ways to trade and provide liquidity on Ref that wasn't available on V1 before. Would you say that it's relatively correct if we talk about the mode of asset management that happens between V1 and V2? V1 could be described as a little bit more passive in the way that you deploy strategies or generate income, versus V2 requires a little bit more active management. Would you say that that's a correct assessment?
Yeah, I guess. Yeah, Jimmy, feel free. Nice to see you. Feel free to hop on if you want to make any comments. But I guess from my perspective, the biggest difference between V1 and V2 is the additional flexibility and functionality that provides users interaction, be it on the trader side or on the LP side. Essentially, it creates much more flexibility at much lower costs. And here, what I mean by cost is, capital efficiency, slippage, even gas fees, for example. So overall, it's just much better, much higher quality of standard for those who are interacting with the DEX.
Okay, cool. That's a great way to get started. I think right now what is live is, V2 is live. You can trade on it, you can provide liquidity. And I think there are 3 pools available: Ethereum, USDC, Aurora USDC, and Near USDC. And just a reminder that V1 and V2 run parallelly. So you can still use V1 as you did and also use V2. AVB, chime in here.
Yes, no, that was an excellent intro. So I just want to say, I did some user testing on testnet, and at some point along the user testing, my feedback was, I don't think I understand how this works. So it'd be really good if, as we move along with the space, maybe we can try to keep the duality of some trading strategies for advanced traders, let's say liquidity providers, but also how things may look different, or things that everyday users say, I just want to, do some swaps. Does V1 and V2, do I go to different places? What considerations would I take if I want to use V1 or V2, or does it make no difference for the user? Those kind of things.
Yeah, absolutely. I think that's a great way to go forward. So, Ray, let's go in that order, some of the more basic strategies, and then we can kind of categorize some things that you can do per the type of user you are. So let's get started with the liquidity provider. So in V1, just think of, how you used to use Ref.finance, which is you want to provide liquidity, and you always do it in a pair, right? It's double-sided. So maybe you want to provide near ref liquidity or USDC, USDT, whatever pool that you choose. You just put in the amount in 50-50 equal value, put it in. That's it, kind of case closed for what liquidity provision looks like on V1. With V2, do you want to describe to us what's different here? What is the concept of concentrated liquidity? And give us a strategy of a potential strategy on V2 that people could try out and what really highlight the difference between V1 and V2 in that way.
Yeah, I guess. So you want me to do a deep dive into LP specifically first? Is that correct?
Yeah. So we can say, let's start with like liquidity provision looks different on V2 because of the way that, it's designed to do concentrated liquidity. Let's introduce concentrated liquidity and what that looks like for an LP.
Yeah, for sure. So I guess on V2 specifically, kind of what people could do is similar to what you could do in V1, but here, with the capital efficiency, you can actually kind of get more out of it by being an LP on V2. So some examples are, as simple as, providing liquidity for stable pools. And what I mean here by stable pools are those where kind of there's basically a correlation close to 1 between the two tokens. Some examples of these are, as obvious as they sound, are like stablecoin pool, such as I believe USDC, USDT, and DAI as a stable pool where you can generate a few percent in APR. In these percentage, you can essentially kind of, with V2 on concentrated liquidity, you can essentially boost that percent depending on how narrow of a range you can provide. This can go up to 400x of your kind of annual return. And the second thing is not only just stable pools, but also kind of, again, highly correlated pools. And these are examples like near and stake near. I think this is another pool, or near or linear near, where essentially the correlation between the two should be highly correlated, if not close to 1. So in which case, providing concentrated liquidity there, originally you're expecting maybe somewhere between a few basis points, but now you can essentially provide all your liquidity concentrated there with a much higher boost in APR.
Right. So just to break down what you mentioned, and I guess like the idea here is that, first of all, the idea of concentrated liquidity is you can specify the price range in which you provide your liquidity. And I think stable pools or with correlated pools like ST near or near make a lot of sense, or as an example, because usually you can expect the price action for these assets. So rather than just blindly providing liquidity to the liquidity pool, you can say most people are using, for instance, USDT to USDC. They expect the stable coin to be stable, so the price range usually stays at like 0.99 to $1.1. So you can specify and say, I'm only going to provide liquidity in that range. That's essentially what you can do, right?
Yes, exactly. And similarly, go ahead.
No, I was just going to say, and then reiterating what you were saying, because most people are using that price range because that's what you want, essentially in a stable swap or stable pool, the higher capital efficiency here means that the liquidity you provide is getting used at a way higher percentage than if you were in providing liquidity in the usual way in V1. So that's why you would generate more swap fees potentially, because it's getting utilized more. So that's just wanted to summarize that. Go ahead.
Makes sense. Yeah, thanks so much for clarifying. But I guess aside from kind of stable pool liquidity providing, I guess this is kind of a little bit more sophisticated now for those who are interested, I guess, AVV. You can also kind of generate, positive transaction fee or farming incentive by providing pools that are not stable. If one example would be, let's say, providing liquidity to USDC SD pool. So one may ask, when providing 50% of USDC and SD token, you're suffering from some sort of impermanent loss due to the volatility of SD token. But I guess, some metrics you can do to see if it's worthwhile to kind of provide this liquidity is looking at the daily volatility of the SD token. This can be like 5 to 10%, and using the volatility of the SD token to then kind of backtrack the potential impermanent loss on a daily basis for that pool. So let's say the impermanent loss in this pool due to the volatility of SD token is 0.03%. Now, given that, right, if you were to annualize that, right, it will be, let's say, 0.35 times 360 or 365 days in a year. That's 10%, 10.95. So let's say 11% of impermanent loss, essentially, you're suffering on an annual basis. Well, essentially, if I were to say, the farming incentive is 50% right now, and the impermanent loss you were to suffer is only 11%, net wise 50 minus 11, just 39% of APR you could be generating if you, basically provide liquidity on a daily basis. So this is for those who are like more interested in providing liquidity outside of stable pools. And, this is not financial advice again. This is kind of, do your own research, backtest your result, look at the daily volatility of these tokens. And yeah.
Right. So the one that you mentioned before about providing concentrated liquidity in a stable pool versus this one, which is, you can provide concentrated liquidity for pools that aren't necessarily correlated, that have volatility in their prices, and you can manage, you can measure the profit range that you're going to get based on the calculated impermanent loss based on the price volatility and also the farming incentives and the general APR of the pool. So I guess the difference here would be the first strategy would be a little bit easier in the sense that you're probably expecting stable coins to be stable and stay within that price range and not change in price. So you can probably just provide liquidity and kind of not have to actively manage it so much versus with a strategy in which you provide liquidity to a volatile pool, you could potentially maybe gain more than you would in a stable swap, stable pool, but then the catch is that you would have to rebalance and actively monitor the price on a regular basis, right?
Exactly. Yeah. So there's this active management part. So everything comes with cost and reward, right? If you're not providing liquidity on a stable pool, which generate lower APR, you can generate more APR if you do more active management. So there's a cost to everything, be it your time, your management, and risk as well.
Yeah, that makes sense. ABB, you were making a sad face earlier. Why was that?
It's just a mix of emotions. It was the closest it got to my brain exploding. I have a couple of questions for Ray. I just thought them in there. He's probably going to address them later on. Ray, I guess I'm wondering whether this will hail the beginning or the introduction of new market participants and we'll see more sophisticated traders. And also, I'm wondering, as far as capital efficiency goes, whether more sophisticated traders on the V2 side will reduce the need for having perhaps less efficient farms on the V1 AMM side, and how we could predict, this is the end of farming as we know it.
So there were a few questions here. Can you reiterate the first one? I already forgot.
Are we going to see new market entrants for V2, like sophisticated people that know how to?
Market entrants referring to different participant or different pools, or what do you mean by market entrants here?
Anyone that knows how to do maths and use V2.
I see. Yeah, so I guess with concentrated liquidity, it definitely introduced more sophisticated traders to onboard. Essentially, this is just, again, due to higher capital efficiency overall and quality of the DEX. And here, when I mean quality, it's not really the UI and the features, but also kind of, quality as in capital efficiency and slippage. Overall, it's just the cost for trading is much lower now on V2, which incentivizes more sophisticated trader to transfer strategy from, let's say, Uni V3 over to Ref V2 as well. I believe.
Awesome. And the second question was around capital efficiency and how a more active, better managed, I guess, V2 pool may reduce the need or the dependency on a V1 pool. So I'll give a specific example. Could you have a $300,000 V2 pool that is, takes over or supersedes over time a $1 million, low capital efficiency pool in V1 for farmers?
Yeah, I think I understand your question. Let me phrase it in a slightly different way. So I guess in V1, when traders come on V1, right, what they matter most, in high level is the TVL, right? Because what matters is like, if the TVL is high, it means if I were to trade on V1, it's low slippage, right? The pool has a lot more liquidity. On V2, on the other hand, it doesn't really necessarily mean the case. Actually, going back to V1, one more thing I want to add, TVL in this case is probably correlated with volume, right? If the TVL is higher, there's probably more people willing to trade on it because it's lower slippage. Correlation goes both way, of course. But on V2, that correlation essentially decreases to some extent. Why? Because now TVL doesn't have to be high, but volume can still be high. Why? Because slippage can be low. What I mean here is by providing a concentrated liquidity within a tight range, traders are willing to trade in a tighter range with lower slippage. So they can, they're more active trading volume, while the fact that, there's no essential need to have high capital needed in the pool.
Amazing. That definitely answers my questions. I guess that the only thought I'll drop in, not a question, you can carry on with explanations afterwards, is that I'm wondering the impact that it's going to have in farming, as in the distribution of tokens from each project, because I know that all projects have been, heavily subsidizing these farms in the attempt to bring in as much TVL as possible, and utilization rates are super low, but you still need the high TVL to avoid the slippage. So I'm wondering, if you no longer need to attract really high TVL, could we have not only much more efficient trading and a better user experience, but also an entirely different mechanism for distributing tokens, hopefully more sustainable in the long run?
Yeah, that's a good point. So this is something that, we're currently actively working on. So kind of a background, prior to V2, on V1, we have been working with individual projects, getting incentive token from the projects itself, as well as working with Garnet to provide bi-weekly incentive from the Ref side. So here will be Ref token. And, with the introduction of Ref V2, farming will be a very interesting thing. First, do we even need a farm? Second, if we do, how would the APR here be projected like? How would the distribution across these tokens be distributed across these concentrated LP? And so on and so forth. So this is kind of, we have to move to V2 and see how kind of the market evolves and how user adapts to V2 and, go from there.
Antonio, you've been waiting for a while. Go ahead.
Oh, yeah. Wonderful. I mean, really good explanation. I was just thinking, in a similar way as Uniswap V3, was a revolution, but also there have been some studies showing that actually a lot of liquidity providers have lost money with this concentrated liquidity and not using it right, or not having enough, not drawing enough data points, as you were saying, based on the volatility of the asset, you're providing liquidity and so on to see what's the optimal point. And then we saw protocols like Gamma, which I think became very popular, and their motto is, it's the protocol for active liquidity management, right? It's basically they automate it for you, they do the calculations for you, so you can have a bit more passive investment. You can have the peace of mind that the liquidity you are providing, it's being given in a range that makes sense, mathematically speaking, right? Do you see a similar tool being deployed soon on top of this Ref V2? Is there actually team that has already asked any grant, let's say to Proximity, to start building this amazing and composable tool on top of Ref.v2?
Sounds like you have a team, Antonio.
Yeah, no, that's a great question. Actually, prior to joining Ref, I was also doing some active market neutral trading, and one of which was kind of what you mentioned, not directly using gamma swap, because back then they didn't really have gamma swap, but essentially the idea is doing LP hedging. So providing, let's say, ETH USDC on Uni, and then just hedging the Ethereum position using ETH perpetual on FTX back then, unfortunately. But so that's like, total valid idea that that people have done in the past. And I know a lot of traders currently, institution, deployed similar strategy across the board. At Ref specifically, our guest Near, I do not think there's anyone specifically working on it. But if you were to say if someone were to work on it, it would be me. So I'm currently kind of backtesting it, looking into it. And one thing that's very important for these type of strategy is that for gamma swap, you're hedging your gamma exposure. But a simpler way to start off things would just be to hedge out your delta exposure and make the position market neutral. And to do that in a capital efficient manner, it is important and critical to have a perpetual market in the Near ecosystem. Why? Because, if and when we do have a perpetual market, we can essentially hedge the LP position at a much lower capital requirement, right? Because let's say I have a, ETH USDC pool of $1,000, essentially I have to hedge out $500 of ETH. Well, if I want to constantly hedge out my $500 of ETH on spot, I always need the $500 to short ETH, right? But if I have perpetual, I can do 20x leverage, 50x leverage at a much lower capital efficiency to hedge out the same exposure required, if that makes sense.
Yep, makes total sense, yeah.
I also want to mention here, we were supposed to have Hippo from Selfie back, who was with us 2 weeks ago when we did part 1 for this. And Selfie is precisely building, at least in terms of the automated side, because they're building like essentially automated strategies where you can run bots, one button, one click, and they're going to build this on top. Right now, they're built on top of Tonic, but they're building it on top of Ref.v2 as well. So it would have been great if we could have had Selfie here to talk, but Hippo was sick, so he couldn't make it. But just to let you know that, at least in terms of automated strategies for Ref.v2, this is something in the works. ABB.
Thanks, Rim. That is super interesting, Ray. Speaking of perpetuals and Near, do you know of any protocols that are close to launch that people looking at deploying these kind of strategies in V2 Ref they could be looking at?
Yeah. So again, for LP hedging specifically, the one way, if you guys are interested, is to just kind of execute it at home on your own, provide the LP, and then just hedge on some centralized exchange if you wish. But on a decentralized aspect, for Near, I know there's a few perpetual market that is, either launch or, launching more market or in the process of launching. This is including but not limited to SpinFi, Orderly, and also I think Toxic. I think it's another one. Tonic. Yeah. But yeah, so these are some examples that, are working on order book or perpetual future market. But I think, they're still in their early stage. They're still in early development. So I wouldn't say there will be a, clear work in process regarding the specific, LP neutral strategy yet.
So perps are live on Spin, at least for now. And then I think both Orderly and Tonic are aiming for, actually, I think Tonic, they're going to launch before the end of the year. So an Orderly Q1. So actually, we'll have quite a few perp markets by Q1 next year. So that would be pretty exciting. I want to ask Ivan and Igor, because we're talking about, building strategies or building protocols on top of Ref.v2. And I'm wondering, because Pembrock already, as a leverage yield farming protocol. You were already building on top of Ref v1. Do you have any plans to utilize Ref v2 for Pembrock?
Okay, let me start. I think Igor will continue. Will add some. So first of all, answering your question, yes, we are about to use this opportunity to have leverage yield farming connected with V2 contract, with V2 liquidity pools and V2 farming. But at current position, we are just learning and exploring how does your V2 contract on Ref works, how does concentrated liquidity works, and trying to understand the main features we can use to bring the most powerful and interesting experience in this field.
Yeah, right now hi, this is Igor. So right now we are thinking about building something what is called grid strategy, which will also impact possibility to create limit orders on Ref v2, and you know, like grid strategy is just you put the intervals like buying below this point, selling above this point, and it will be like automatically fully managed. It will be with leverage. It will be all the best stuff which Pembrock right now have, and as well as the best part of Ref, which just was delivered.
Brilliant. Yeah, that's super exciting. Speaking of limit orders, Ray, I would also love to hear, because Ref v2 now enables limit order functionality. What is something like first of all, how does it work? Like, what is the traditional concept of limit orders and how does it work on Ref? Let's start with that, and then maybe we can go into an example.
Yeah, so I guess here, kind of, just a high level of what limit order is. This is the ability to place a buy order or a sell order in which it will be only executed at the limit price that you specify. So let's say I want to buy like one NEAR token at $3. Then let's say NEAR right now is trading at 3.1, 3.2. Then the order will not get executed until it reaches $3 or lower. And if it does reach below $3, it will execute at a lower price. And similarly, it will happen for sell order as well.
And how is it that
formally,
go ahead, Igor.
Yeah. So AMM was like good solution for some period of time, but right now we see that it's kind of complicated. It's always have a lot of slipperage, and people usually not happy having slipperage, because while you're buying something, your intention to buy on the price which you mentioned. So having a limit order is something which heavily used in all like traditional finance, in all real world. Usually you want to buy. You do not want to send some tokens and then work with utilization curve, with I know, like wherever curve it is, this YXK. It was good solution. Back in the days, it was good solution, while you need to operate with huge transaction cost, low block time, low block capacity, really huge block time, and all this stuff. So right now, with what NEAR can produce, I mean, like a really ultra fast block time, ultra cheap transaction, etc. There is a huge place for creating limited orders. And I know that order book already exists, but in Ref.finance, it's kind of pseudo limit orders, but wherever it's still for user experience is the same. So you just want to buy one NEAR for $1, and you set in this order. If NEAR goes down to $1, your order is executed. That's pretty. That's how it works. And you can build the strategies on top of it. You can do a leverage on top of it. You can do whatever you want on top of it, because it's controllable, it's scalable, it's predictable. One of the big part which is missing right now in all the DeFi indexes is something that you cannot really measure and you cannot really scale while you do not know what's the impact.
Absolutely. And I think just like you say, Igor, like it was a function that people like and use a lot on any kind of order book based centralized exchange. And that was something that was missing in AM indexes just because by the way that AM indexes work. And now, very interestingly, with Ref v2, you can actually utilize limit orders from the user end and say, here's a price that I want, and execute the order only when it meets the price. So you have a lot more customization, flexibility, just like Ray mentioned before, when it comes to the way that you can trade. And Ray, do you also want to mention a little bit about, first of all, the zero slippage aspect, how it works with regards to Ref v2 and limit orders? And I think there has to be some kind of catch, right? Like, is it as good as we think it is with limit orders? Does it work exactly the same as it does in CXs, or what is the risk parameter that we should watch out for, or something that we should be mindful of when we're using limit orders?
Yeah, I guess don't forget you place your limit order, and if you get filled, remember that you have exposure on, let's say I'm trying to buy 1 million NEAR token, right? I place the limit order. I want to buy 1 million NEAR token at $2. And then, I go to sleep. And then when I wake up, I'm like, oh, I didn't get filled yesterday night, so I don't have to worry about it, right? No, you have to check, right? Yeah, maybe you're already long 1 million NEAR token without being aware. And the other thing is about, I don't know if this is how they do accounting on centralized exchanges, but, on Ref, when you place your limit order, let's say I want to buy 1 NEAR at $2, then of course, to buy that 1 NEAR, you have to pay $2 of USDC. Since it's a limit order, it might get filled, whenever it reaches your price. So essentially, you have to put down your $2 and then into the smart contract. And when it gets filled, you get $1 in exchange, 1 NEAR token in exchange, right? So I guess this isn't really about capital efficiency, but it's more about you have to provide the capital needed to acquire the asset or to exchange the asset that you're wanting to get in the limit order. So I guess this is one of the catch, you may say. But yeah, that's all I have.
Yeah, that makes total sense. And do you also want to talk a little bit about the zero slippage aspect? And if you want, and if it's related, about the fact that, limit orders act as liquidity provision in a sense as well. I think that dynamic is quite interesting, if you want to talk a little bit about that.
Yeah, so I guess, again, limit order, basically allows you to have zero slippage. And again, zero slippage here means by, if I want to buy 1 NEAR token at $2, it will always be at $2. It wouldn't fluctuate like I do in a swap, right? In a Ref v1, if I were to do a swap, I want to buy, let's say, 1 million NEAR token. And then, if I were to buy 1 NEAR token, it will be, let's say, $2, right? But if I want to buy 1 million NEAR token, it might be $3, $4, $5 due to the slippage, right? But in limit order, I can place that limit order and be like, hey, I want to buy 1 million NEAR token only at $2, right? This will allow you to kind of execute the trade if and only if the NEAR token is at $2, right? It won't execute when it's $3, $4, $5. So you won't lose money that way, if that makes sense for the trader side.
Yeah, I may give an example from the pleb side, the muggle side, just to see if I'm getting this right. So there was a token, I'm not going to say which one, a smaller project on Ref that I've been trying to accumulate, and you could only really do $500 a day, sort of, because you start moving the market, but then that the next day it sort of reverts back to the mean. So would a limit order basically help me automate this sort of fractionalized buying or buying in chunks always at the same price? Because that even if you move the price with each buy, it's likely to revert back to your entry. Is that one of the use cases?
Yes, if I understand your question correctly. Yeah, it will execute your limit order at the specified price.
Awesome. Thank you.
All right, finally, Ray, I'd love to get into the last strategy that we didn't talk about yet, which is the arbitrage opportunity that happens between the V1 and V2 pools. Do you want to elaborate a little bit more about that?
Yeah, I guess to advertise this a little bit, this is a once in a lifetime opportunity as V2 is fairly new, and liquidity providers are just starting to provide liquidity on Ref V2. So kind of a high level idea of what this means is that on Ref V1 there's a bunch of pool right now. On Ref V2, currently there is 3 pool, like Ren has mentioned, USDC Near, ETH USDC, and Aurora USDC. So let's just pick an example, right? Like USDC Near. So on Ref V1 and Ref V2, there's USDC Near. Essentially, kind of what I mean by ARB is that on Ref V1 you can maybe buy Near using USDC at $2, and then simultaneously you see opportunity on Ref V2 that allows you to sell this Near token for $3 back to USDC. So what essentially happened is that you start off $2 of USDC, you swap it into 1 Near token, and you sell it for $3 back into USDC. So you essentially made like $1 of profit, right? So where does this kind of opportunity comes from, right? Is it too good to be true? Well, this is due to the kind of inefficiency in the market right now in Ref between V1 and V2, and as users and LPs migrate from V1 to V2. So, as the market becomes much more efficient, there will be bots that will automatically do that. And kind of if you want to build your own bot, Ref has also provided the SDK for Ref V1 and V2 that essentially allows you to kind of do arbitrage between the 2 pools. So yeah.
Yeah, that's some real alpha right there, because this is something that probably you can only get now. You can squeeze in now and potentially not later. And I think another fun fact was yesterday we were talking with Didier, and he said that he kind of as a test was running his own bot on V2, and because Near gas is so cheap, he ran like 160 transactions or like something, or like a couple hundred, and it only came down to 60 cents in total cost. So it would be a very interesting opportunity if you were interested in creating a trading bot yourself and run it on Ref V2.
I think that the real alpha and the real opportunity is basically trading against Didier's bot. That's where the money is right now, I think.
If PizzaMaker.near is listening. Okay, cool. Ray, thank you so much. I think that kind of gives us at least something to start off with regards to Ref V2. I would imagine, like ABB, Antonio, from a trader perspective, would you say that the strategies that Ray laid out were interesting enough? Is it like complex, or is it entry level enough for you guys? Do you have any concerns or questions about the strategies that Ray mentioned?
Maybe I'll go first. I look back with a bit of melancholy. I feel like a dinosaur. I do feel like the efficiencies of V2 will start to fade the traditional farming in V1. And I don't know, that was just a really fun part of my life. I'm pretty sure I've made a net loss with impermanent loss. But yeah, I like the ethos of everyday people being able to create pools and provide liquidity. I don't think I am sophisticated enough to run a bot on V2. However, I am looking forward to what Antonio mentioned about, having another Lego piece on top of V2, something like Gamma, whatever the thing is called. I would definitely consider, and I'm actually interested in allocating capital to something like Gamma that would actively manage V2 positions on behalf of the user. Who knows? Maybe that's like the new world. Well, no, that's a bad reference. That's going to be the way forward as far as everyday people wanting to provide liquidity. So overall, I'm really excited. I feel like there's a lot of we have a big onus on us to try to communicate this as best as possible to users. Like I've been learning a lot myself, and I've been around DeFi for a while, so definitely trying to find ways to keep conveying it further down the chain. But yeah, it's amazing. One thing I wanted to highlight, and I want to know if Ray will have time to expand on it. Antonio also made reference to V3 Uniswap. I know it's been drilled into my brain that the concentrated liquidity as we have it right now on Ref is better than Uniswap V3. I believe, my understanding is that there are some things at a particle level on Near that enable us to have some extra couple of features, or something works different. So yeah, maybe if we could take away that simple tagline, better than Uniswap V3, and maybe if Ray could give us a couple of pointers on maybe what are some of the efficiency there, I would be very happy.
Yeah. Do we have time? I just want to make sure. I realized I took up the entire hour. So
Yeah. Let's just say, give us a 1-minute summary, and then I want to hear from Antonio and Pembrock before we end the entire space.
Yeah. So there's a few questions from AVB. Which one do you want me to answer? Which one is the most critical one?
Uniswap V3.
Which was what's the difference, right, between Ref.2 and
why is it better specifically?
Why is it better? Okay, I see.
Narrow it down to why is it better?
Yeah, I can break up into a few bullet points. So first, you can enjoy there's an article for this. So I guess if someone can, if you can share the article Medium page in the chat as well. But in the article it outlines a few specific benefits. So first and foremost is the higher capital efficiency thanks to discretized liquidity. And what I mean here is that, of course, UniV3 has concentrated liquidity. We also have concentrated liquidity, but we also have limit order, right? So that is essentially additional liquidity provided into the pool. And what does that mean for LPs? Because these limit order traders, their incentive is to get trades done, right? Their incentive is not to generate transaction fee and all that. So when one were to place a limit order, there's an associated transaction fee, and the associated transaction fee will go to the underlying concentrated liquidity provider, right? So in a parallel universe with UniV3, essentially on Ref.2, you not only will generate additional fee due to the capital efficiency from concentrated liquidity, but also fees generated from those who place and get filled on limit order. And of course, with Near, we enjoy the ability to trade on Ref.2 at a much faster speed and a much lower cost. Cost here meaning gas speed. And then thirdly, the ability to place limit order. So I've been talking about limit order. This is not capable to be completed on Uniswap directly. So you can create a synthetic limit order on Uniswap, but it's not a full representation of what a limit order actually means, unlike Ref.2, where it actually means what it means. And yeah, I think these are the main key points.
Brilliant. Thank you, Ray. And before, I realized this was very Ref.2 heavy, which was a point, but I do want to let Antonio and Pembrock, because last time we left off talking about a little bit more advanced and sophisticated DeFi strategies. And Ivan, I know that you had wanted to talk about leverage yield farming with delta neutral strategy, shorting using several protocols. And Antonio, you also wanted to talk about using near or near to X on and then leverage yield farming and then shorting near. So if you want to go into kind of giving your illustration of a potential DeFi strategy for a little bit of an advanced user on near, this would be the perfect time to do so. So either Antonio or Ivan or Igor, who wants to go, please go ahead.
Oh, yeah. Definitely sometimes you have strategies that offer you a lot of yield in near, having exposure in near, right? This could be, for example, when Stay There just launched and was giving a lot of rewards, or this could be through Pembrock leverage yield farming, right? But some people might be reluctant to have exposure to near, right, or to any crypto asset in this bear market, right? So the option is to get delta neutral, shorting near. You could do that, for example. I was doing it in Nex. Nex is a perp DEX in Aurora. that allows up to 50x leverage, right? So as Ray was saying before, it allows for a lot of capital efficiency because you can put most of your money, let's say 98% of your money, longing that near related strategy, giving you a lot of yield, and then you just use 2% of the capital to get a 50x leverage shorting near, right? I mean, this is just an example. It's not good to use so much leverage because you can get easily liquidated, right? But let's say you can use a 10x leverage, and then most of your capital is farming that fat yield, and just a little portion of your capital is achieving that delta neutrality, right? So yeah, I mean, I'm sure that the perpetual DEX is a space that it's gonna be revolutionized over the coming months with the coming of Orderly, with the coming of Tonic, with the new features that Next is going to be bringing. So it's going to be very, very exciting to see how other protocols might build, sophisticated strategies and automated strategies on top of it, like some sort of like Ref.finance, where you would be maybe having a strategy using delta neutral, right? So the same way we have talked about how this Gamma in Near could automate strategies using Ref v2, then some other project could build a automatic strategy doing delta neutral, right? And farming the fattest yields in the Near and Aurora ecosystem. So yeah, looking forward to these kind of things being built in 2023.
All right. Yeah, I think that's a really good insight that I'm glad that we got to talk about. And for Ivan or Igor, I mean, you guys are able to enact delta neutral strategies as well. Are there any other, do you want to add to this on the Pembrock side? Are there any other more sophisticated degen strategies that you could potentially illustrate for our listeners today?
Igor, do you want to share something?
Yeah, I was mostly thinking, so it's not like you don't need like a real enormous amount of strategies. So usually what we are doing is already like a big stuff, and I hope the grid part with leverage will help you a lot, because it's like the main basic idea. You just need to buy cheaper than you sell, and this pretty it. So yeah, there's like a lot of complicated stuff, but main one should be simple, and this is how it can be used by a lot of users, and a lot of users can onboard.
All right, keep it simple, don't overthink it. And I think that's something that is also really important to remember, especially in markets like this. So, and you're saying that these kinds of, simple to the core strategies you could potentially find on Pembrock.finance.
Sure.
Okay, well, I think that wraps things up. Thank you everyone for joining. Let's just do, one last question, sneak peek at 2023 from your projects or from maybe even personal life, maybe that you want to share with us. Let's go around saying what we look forward to in 2023, what we should look for from you, and then I think we can end the year on a high note. So AVB, do you have anything you want to share, Alpha for 2023?
Oh, so much alpha. I don't know what to say. I think I just want to say that I'm really excited. I'm very much aligned with the strategic approach for 2023 that Near shared recently on a blog post. I've made a YouTube video about it. The shifting gears from being, focused mostly on the core tech, protocol level engineering, and now shifting to like the builders and like the end user, I'm extremely excited about. At Metapool, we've got several initiatives to both support builders. We do, hackathons and a bunch of stuff, grow the pie, and we need more people winning more, but also with validators. At the moment, it is, there's a few conversations happening, and you may see them on the governance forum and in other places. We're having issues around it just not being sustainable for validators to run a node at the moment. So we're trying to increase validators, but, market conditions are tough. So I'm really excited to explore initiatives there to have a more decentralized ecosystem. And yeah, looking for ways to distribute that near among the smaller players.
So to more decentralization in 2023.
Yeah.
Antonio?
Yeah, well, so in particular for near Malaysia, we want to continue doing this hybrid model of both virtual and physical activities. And for near starter, I'll say that yes, we're going to have a very exciting month of January, with the launch of our own token in the 9th of January, and then one of our incubated projects, which will also be launching on the second half of January. So yeah, I mean, the near family keeps growing.
Nice. Ivan, Igor, for Pembrock, what can we look forward to in 2023?
Yeah, we are looking to build something new and welcoming new members to Pembrock family. Yeah, market conditions. That's why we will build few strategies which will be as lean as possible. Sometimes market neutral, sometimes short position, sometimes long position. But our intention to be really simple and really user oriented.
Yeah, from my side, it's three simple things. First of all, attract more new users, more new enthusiasts, build more and more connections with near ecosystem projects, and developing the project with updates and improvements to make it work better and be compatible with all updates on the near ecosystem, like Ref v2 concentrated liquidity stuff, so we can be useful for anybody in the whole ecosystem. Yeah.
All right, let's do it. And Ray, I don't know if you want to share anything from the website for 2023 or even maybe personal ambitions, but feel free to share what you have.
Yeah, so I guess for Ref, I think we're building a lot of going forward. There's Ref v2. There's a lot of work to be done on Ref v2 on kind of one of the things that ABB mentioned was like farming. We have to figure that out, and also other components will be including there's a few initiatives that we're looking into right now. Right now it's not really disclosed to the public yet, but there's a few cool feature we might expand above and beyond just becoming AMM. There might be other aspect of features that we might try to kind of encompass within the near DeFi ecosystem aside from AMM. So yeah, there's a lot of cool stuff that we're working on. And then one thing that I want to add that I believe one of the speaker mentioned was I think gamma strategy. One of the things that I personally have been looking into, nothing confirmed within the Ref team yet, but is Rage Trade. So they have recently launched a delta neutral vault that kind of interact with GMX, which is the perpetual future on Arbitrum. So I think what they have done is it's not novel, but it's critical, and they're one of the biggest ones that has done it well, promoted well, and achieved the APY successfully and all that. I think this is something that I'm currently looking into and hope to do similar things on Near as well. But I have to head out for another call. It was nice meeting you all.
Thanks so much, Ray. And thank you all the speakers for your time. Everyone enjoy the holidays. There is no space next week. I'm taking my first break from the Ref Spaces.